All right, and we are live. Hey everybody, Smart Silver Stacker here. Thanks for joining me for another live stream today. Today I want to go over this post from Twitter, or I guess it's X now. But this was a post on the social media site formerly known as Twitter by none other than Robert Kiyosaki, the author of Rich Dad, Poor Dad. And I've done videos about Robert in the past. He talks about silver from time to time, and sometimes I get some feedback that people say, well, he's made a lot of forecasts that haven't panned out, etc. But on this one, I think he's really spot on, and we're going to go through this tweet and break it down piece by piece, and I'll tell you what I think about this statement, because what Robert Kiyosaki is telling us here is that silver is the biggest investment bargain at the moment. And I'll just read the tweet to you here. He says, BIB, biggest investment bargain. Silver still 50% below all-time high. In demand by greenies, solar, electric vehicles. Silver's second most used commodity after oil. Silver has been money for centuries. Who can't afford one silver coin? Yet, most people prefer to save counterfeit fake dollars. Sad. Well, I don't know how sad it is that silver is as cheap as it is. I'm pretty happy that it is, actually, because I'm a net buyer. I'm a stacker, and we've got a CP in the chat here saying, I'm about to buy 100 ounces of silver right now. So I guess he agrees with Robert that this is the biggest investment bargain around. But let's break this statement down. Before we do, just a quick thank you to today's video sponsor, SDBullion.com. Right now, gold and silver stackers who are new to SD Bullion can get gold or silver at spot by visiting sdbullion.com/news. So check that out. Let's take a look at the silver price. Let's just talk about the valuation portion of this tweet. So he says that silver is down 50% from its all-time highs. And this is the chart from SD Bullion, the long-term chart. And you can see this only goes back to the mid-90s. But even looking at this, back in 2011, silver hit, I think in intraday trading, it got up over 50 or very close to it. But this is probably a weekly chart. And it goes up to just about 50 here. And you can see right now we're at 23.35. So we are just about half of that level. But this is really not the shocking chart when it comes to the valuation of silver. To do that, we got to look at this long-term chart. This is from macrotrends.net. So right now we're here on silver, and this is a monthly closing price chart. You can see here's that spike from back in 2011. On the weekly chart, it gets up almost to 50. And then if you go back, there's also this big spike in 1980, which the weekly closing price about 35.75 at the high. But the crazy thing about this chart, if you really want to get an idea of how undervalued silver is you've got to apply this inflation adjustment option. Now, when you apply inflation adjustment, you can see that 1980 high, because that was 43 years ago, there's been a lot of inflation since then. That 1980 high, if you adjust for inflation in today's dollars, is well over $100. In fact, it's over $140. And now we're right down here. So this is really a shocking indication of just how undervalued silver is. And there's almost, I don't think there's any other commodity with a chart like this, with the price of the commodity being so low relative to its previous highs, especially in inflation-adjusted terms. Steph Van Loon in the chat here says, I'm a silver bull, but I wouldn't call it an investment, but rather a speculative asset as it doesn't generate cash flow. Well, I suppose you could call it a speculative investment. It's kind of been turned into that. Of course, historically, silver is money. I mean, that's what silver is if you look at it historically. Right now, we're talking about the valuation in a fiat currency that fluctuates a lot. And yes, silver has been kind of demoted to the role of a speculative industrial asset. But I don't necessarily know it's going to stay that way forever. And when it, reverts to its role as money, when the fiat system that we have collapses, I think that folks holding real money, physical silver, are going to do very well. It's not financial advice, it's just my take on things. So going back here, we've got, also he says that the demand by greenies, solar, and electric vehicles is going to spike. Now I want to focus on solar here because there really is evidence that the demand for silver in the solar photovoltaic industry is on the verge of moving up drastically. So you got this article from Bloomberg. This is from earlier this year in July. The world's appetite for solar panels is squeezing silver supply. And I'll read a little bit of this article to you because there's some interesting info in here, but we will dive even a little bit deeper than just this headline. So Bloomberg reports here that changes to solar panel technology are accelerating the demand for silver, a phenomenon that's widening a supply deficit for the metal with little additional mine production on the horizon. Silver in paste form provides a conductive layer on the front and back of silicon solar cells, but the industry is now beginning to make more efficient versions of cells that use a lot more of the metal, which is set to boost already increasing consumption. Oh, what's that acronym mean in the chat there, folks? All right, so solar is still a fairly small part of overall silver demand, but it's growing. It's forecast to make up 14% of consumption this year, up from around 5% in 2014. It's according to the Silver Institute, and we can take a look at that chart here in just a moment. Now, let's talk about these new forms of silver, because if you want to find out about those, we can take a look at this. This is a research paper published at the University of New South Wales in Australia. The title is The Silver Learning Curve for Photovoltaics and Projected Silver Demand for Net Zero Emissions by 2050. And this is a free article. You can Google this. It's in the Journal of Photovoltaics. There's a few parts of this article I just want to point out to you. I mean, it's pretty thick academic stuff, but there are some components that we as stackers really should pay attention to here. So first of all, they talk about these new technologies. So it says here, projected future cumulative silver demand in the photovoltaic industry, this section, due to the higher potential efficiencies of TOPCon and SHJ than PERC. So TOPCon and SHJ, those are the new technologies. PERC is the existing technology, which makes up the bulk of solar cell production today. These N-type technologies are expected to have increased market share in the future. And then, excuse me, we can look at this little table here. It has the silver consumption per cell and then the module power per cell. So basically the efficiency or the power generating capacity of these different technologies. So you can see for PERC needs about 90 to 96.1 milligrams per solar cell. TOPCon, which is one of the new technologies, needs 130 to 162 milligrams. And then SHJ, another one of these new technologies that's a bit more efficient, requires 198 to 242 milligrams. And then here you can see that the output for these new technologies are higher than those for the existing technology. For PERC, you get module power of 440 to 450 watts, but then for these new technologies, you get 450 to 460, or for the one that consumes the most silver, the SHJ, 465 to 470. Now that might seem like a small difference, but when you're talking about how much total output you're getting for your solar cells, it might make sense to use a little bit more silver. But that means that the silver demand from this sector of industry is going to rise significantly. They go on to say here that, sorry, let me go back here. The 2021 ITRPV, so these are some different scenarios that they have forecast here for this paper. It suggests a dramatic increase in the N-type technology market share to 45% by 2031, while Solar Media highlighted a more aggressive transition with greater than 90% market share by 2030. So, I mean, the thing to take away from this paper when you really read it is that there's a lot of uncertainty as to where the industry is going to go. And they kind of highlight the need to make these panels more efficient because there is a real possibility that, especially in light of the green agendas of many national governments around the world, they're trying to get rid of fossil fuels and replace them with solar. So you have all these government mandates that are directing taxpayer money into this industry. So you might even get some weird distortions here that wouldn't necessarily happen in a free market. But I want to read this to you, this last bit here, because this kind of talks about the potential for a significant increase in the demand for silver. However, with the typical annual photovoltaic industry growth rate being higher than the rate of silver reduction per year, because they are making these panels more efficient every year. They call that the solar learning curve in this paper. And the idea is that even though they are making them more efficient, the industry as a whole is growing so fast that it's still consuming more and more silver. It says future expansion of the industry will likely continue to increase the annual silver demand, particularly if there is a transition to silver-intensive N-type technologies. The broad electrification scenario, again, this is one of those possible scenarios that they outlay in this paper, could require more than 10, 15, or 17.6 kilotons per year. Respectively, that's 43%, 64%, or 75% of global supply. And for reference, 10 kilotons is equal to about 321 million troy ounces of silver in 2030, with industry 100% PERC or a rapid shift to N-type technologies respectively. So they're saying, if we do get this rapid shift to N-type technologies, it could use as much as 75% of global supply, or 17.6 kilotons of silver per year. It says, although unlikely due to significant manufacturing changes compared to PERC, a rapid widespread transition to SHJ solar cells could see silver demand from photovoltaics exceed the current global primary annual silver supply by 2030. The secondary supply is neglected as the long lifetime of the photovoltaic modules will hinder the material availability from recycling. So basically, what they're saying is that if they do transition to this SHJ solar cells, and again, there's some uncertainty, you could see more than 100% of the annual mining and recycling supply of silver being put towards just the production of solar panels, not to mention all of the other uses. I mean, as Robert Kiyosaki points out, silver is the second most useful commodity next to oil. It's used for all sorts of things. It's just that solar is a sector that is really expanding rapidly, as they point out in this paper. And the point is here also, these panels take about 25 years before they are at the end of their life. That's when you would recycle them. So the secondary supply from recycling from these panels is negligible, at least for 25 years until they start, from when they start manufacturing these things. So they point out here, finally, to maintain silver demand within the photovoltaic industry to less than 10 kilotons per year, which is 43% of the annual silver supply, the silver LR, that's the learning curve that I mentioned earlier, must accelerate substantially to 30% or even higher at 30 to 40% for a shift towards silver-intensive N-type technologies. So right now, the silver learning curve, the way they've calculated it in this paper, is around 18%, plus or minus, I think, 1 or 2%. So it's not anywhere near this 30%, this reduction in silver. So very likely, if things continue on at the pace that they are on right now, the demand for silver from the solar industry will expand significantly. These are the latest numbers from the Silver Institute regarding silver supply and demand. It goes back to 2014. It's got everything here, the mining production, how much you get from recycling, etc. I just want to point out this line here of photovoltaics. As much as there is speculation as to whether, or not it's going to balloon, it is on the rise. I mean, you can see in 2014, about 48.4 million ounces of silver were consumed for the production of photovoltaics. And then this year, it's forecast to hit 161.1 million ounces. So that's a significant increase in less than a 10-year time frame, seeing the amount of silver consumed more than triple. So, if that trend continues, there's not going to be very much silver to go around. You can see mine production has stayed almost completely flat since 2014. I mean, it was 882 million ounces that year. This year, it's projected 842 million ounces. So, with silver prices as low as they are, which we mentioned earlier, I mean, when you look at this chart, you can see that silver's terribly low compared to the historical peaks. There's not a lot of incentive for new miners to come online, and it takes about 10 years for a silver mining operation to kick in. Now, it's true that a lot of silver is produced as a byproduct of other metals, a lot of the industrial metals, but when you have this inelastic supply and the inelastic demand and a very limited supply, those silver mines that directly mine for silver are very important, and they're really not incentivized to increase their production in any way. And I mean, you can just see the total demand for silver rising significantly over this time period as well, and the supply is basically flat. It's actually less than it was in 2014. So you know what that means. I mean, rising demand and diminishing supply, that will have an impact on prices to the upside, at least if you ask me. Now, one other thing I want to comment on here that Kiyosaki mentioned, silver has been money for centuries. And I mean, he's not wrong, it has been, but it's actually been money for millennia. I mean, this is an article from archaeology.org about hack silver hoards found in the Levant over there in the Middle East, in Israel and Gaza. And archaeological evidence suggests that they may have been used as currency 3,600 years ago. They were used to pay workers. And the silver had been mined as far away as Turkey and Southeast Europe. So it was being carried to the Levant through long distance trade. So even 3,600 years ago, folks were using silver as money. And they've been using it as money all along. And we do find ourselves in this scenario where the world has completely abandoned hard money assets for the first time ever, really, that there haven't been some form of precious metals money around the world. Of course, the U.S. Mint still mints silver eagles and puts a dollar face value on them, but that's pretty much just a, homage to the past. It's not since 1964 that we've actually had silver in any measurable or significant way in the circulating currency supply. And so, it's just a sign that silver is very unloved, but silver has been money for 3,600 years. And I think at some point, this period of purely fiat currency experimentation, which we're undergoing right now, will ultimately just be kind of a blip on the radar. For the vast majority of human history, gold and silver both have been money, and silver, the common currency for day-to-day transactions, workers getting paid. I mean, that's like the same thing 3,600 years ago, workers getting paid in silver as we had here in the U.S., 50 or 60 years ago. Back prior to 1964, if you were getting paid in U.S. dollars, it was, internationally it was convertible into gold, but even for your everyday person, the coins were actually silver. And again, silver will stick around. It'll be a useful industrial commodity. It'll likely be a monetary asset long after the current fiat U.S. dollar is consigned to the ash heap of history. Whether that be a decade from now or 100 years from now, silver's still going to be around. Robert Kiyosaki says, who can't afford one silver coin? Well, yeah, I mean, if you go down to your local coin shop, you can pick up one silver coin for, looks like on SD Bullion here, we got $10 face of 90% U.S. silver half dollars, trading for just over $20 per $1 face. So, maybe you can go to your coin shop and get silver silver half dollar for $5 or $6. Or if you want to get a roll, you can get them on SD Bullion. If you get one roll, it's $202, so it gets you the free shipping. I always order at least $200 when I'm ordering from SD Bullion, the online provider of bullion I typically shop with, because that is how you get their free shipping. But, it doesn't break the bank. I mean, if a silver coin can be had for $6 or $7, or you can get a nice roll of half dollars for $200, most people can afford that. Most people can afford at least one silver coin. And it's not financial advice, but silver is kind of the money of the everyday people, and it also happens to be one of the most undervalued assets around. So even if, you don't have the capital to deploy into stocks or real estate or any of these things, it is at least within everybody's reach, really, to save $5 or $6 and start getting some hard assets, the kind that can't be printed. So I'm going to go to the chat here before we wrap this one up. Let's see. DR says probably older than 3,600 years. Ain't the pyramids older? Yeah, gold to silver was valuable then. Yeah, I've heard that in Egypt, the gold to silver ratio was something like 1-to-1. Now, that might be apocryphal, but yeah, I mean, silver has been valued by humans for a very long time, as well as gold, because of its utility, because of its beauty. You can read stories in ancient history about, I think it was Xerxes, the emperor of the Persian Empire, who would drink his water out of silver flasks because it kept the water fresh and clean because of silver's natural antimicrobial properties. So yeah, for a long time, silver has been valued. RS says, I will say silver is holding its own because the dollar index is up, but spot hasn't moved much past 23. Yeah, I mean, I think it's possible that we could see, if we see some kind of a deflationary collapse here, we could see the US dollar index move up temporarily and the spot price of silver fall. I think if it does happen, it'll be a bit of a head fake. I think it'll be a very short-lived decline, but, anything's possible. But yeah, silver is holding up pretty well here. You're right. And I think that might be because people are beginning to realize the writing is on the wall for inflation. Inflation is ticking back up here despite the Fed's hiking rates. So yeah, I think silver will do very well in the economic conditions that we are to experience over the coming years. John Gordon says silver at 125 to 150 an ounce would be good exchange for a day's labor. Yeah, you can find all sorts of historical examples of silver pricing labor. I think in The Art of War, it lists the price of a day's soldiering at 1/10 of an ounce of silver, or that would be equivalent to a denarius, which is a Roman silver coin, very similar in size and weight to a U.S. silver 90% dime. A denarius would pay for a Roman legionnaire's wages for one day. So yeah, $125 an ounce. I mean, I guess that would mean a tenth of an ounce was worth only like $12. So even when you look at those historical ratios, that would still be a low price if we're talking about the history. Of course, you got to factor in industrial means of production of silver has perhaps made silver a little more accessible. So these comparisons to ancient history are not always apples to apples, but I mean, it's a good point. All right. Well, that's pretty much it for today, folks. Thanks for those great comments in the chat. Hope you're all staying safe, happy stacking, and I will catch you next time. Smart Silver Stacker out.